right, welcome into the Cow Guy Close. I am Scott Shellady, also known as the Cow Guy, and the numbers are in. Drum roll, please. And they say you should be feeling much better, right? Never mind the $7 boxes of cereal or the $18 Big Mac meals. Inflation's easing, meaning prices are still rising, but at a slower pace. The things we consume on a daily basis are up between 20 and 25% over the last couple years. So my message to you is this. Show me the money, okay? The inflation read came in at 3.2%. That's the CPI number, right? We were expecting 3.3%. Well, that sent stocks to the moon, right? We're up around 500 points as I speak right now. Now, everything is rosy, apparently. The skies are clear. Nothing to see here. Move along. Now, rate cuts are now firmly on the menu for next spring. Watch the headlines this week. They're going to try to tell you that inflation's been beaten. Nope, it's still rising at 3.2%. And don't forget about that target of 2%. Now, if anyone believes the Fed's going to cut before they get to that 2% target, I think they're planning on either the Fed losing credibility or maybe a lesson in fuzzy math, or maybe even both. All right, so here's where I stand on this issue, right? It's going to be a problem when we've got so much money to raise. $8.6 billion is what we need on a daily basis until now and the end of the year. Now, we've also seen our borrowings skyrocket. Now, the debt service on the money that we've borrowed already, not including the $600 billion that we need to borrow between now and the end of the year, and the $860 billion we need to borrow next quarter, we've gone over $1 trillion on an annual basis. Now, remember, our budget, our defense budget is $850 billion. Now, think about all those folks that are out there all too willing to picket and say we spend too much money on defense and the military. But where are they when we want to picket about spending money on interest? It's just the interest on the debt. We're not paying any of the debt back. That's just the debt service. And then when you get to this point of everybody's going to talk about inflation coming down, 3.2%. No, it's still going up at 3.2%. Is anybody going to tell you? Anybody going to tell you that you're less fat as you gain weight at a smaller level going up? No. So I've set this one up on a tee. We've now got Rebecca. She had a little bit of technical difficulties. Let's bring into the show Rebecca Walser, because I know Rebecca's got some great things to say about this as well. Rebecca, we had that CPI print today sending stocks to the moon because we missed by 0.1%. I'm sure you're going to have something to say about it, but where do you stand on this? And is it all good now? Nothing to see here? Move along?
I wish, Scott, that we were just be like, oh, everything's fine and everything is great. But your point is so valid. Like, we're so stuck on not going up that we forget that we are still above the 2%, what we would consider on a normalized level. And things are still 3.2% more expensive than they were. And that's just obviously, the headline number. Core is still higher. So, yeah, we saw, both numbers come down. But also, what is the reason they're coming down? And so really, this good news, how the market has bad news is good news because then the Fed's going to cut or whatever. This good news is actually bad news because what it means is the policies are working and we're inching ourselves towards economic stagflation, deflation, economic malaise, and that is exactly what we don't want. So no, Scott, I don't think that this is the best news ever. And I can't stand how this stock market, people need to stop and just have this basic conversation with themselves. Are the stocks that, were valuable yesterday at one thing that much more valuable today because we know the Fed is no longer going to raise interest rates? Like, in other words, when did macro policy at the Fed central bank level basically decide what our market's going to do on a year-to-year basis? When did this happen? This is the central bank running Wall Street.
Exactly right. And let's just take it a little bit further, too. I agree with you 100% on that. But 3.2%, guess what? I don't care. Is my $7 box of cereal any cheaper today than it was yesterday? Is that $18 Big Mac meal in Connecticut any cheaper? I mean, show me the money. Don't tell me that inflation's only running at 3.2%. Show me the money. That needs to be a negative number before I start to get excited. No, yes, we are going up at a slower pace, I guess. But is that good news nowadays? I guess it is. That's what we're celebrating. We're going up. Our prices are rising, but at a slower pace. Let's get out the band and give yourself an attaboy.
No, and the reason that this is good news for the market is because it means, oh, the Fed isn't going to tighten anymore. And now, the Wall Street getting ahead of its skis is so typical, right? We had how long Wall Street said, oh, the Fed's got to cut, the Fed's got to cut, the Fed's got to cut. They didn't cut, they kept raising. Then you have Powell, you see a little bit of dovish tones coming in. The second that Wall Street said, oh, we're going to cut June, then it was May. Now I'm hearing March. We have CME watching, oh, we're going to have a cut in March already. What that means, Scott, is that they expect the economy to do bad enough with these higher for longer rates that they're going to need to stimulate again.
Right.
Where are the economists that are saying this is a problem if the Federal Reserve has to come back in on the heels of a global recession, of a global pandemic where we shut down the world and printed the equivalent of $20 trillion globally? The fact that we still are spending at this pandemic level, the interest is at pandemic level, 2020 levels. It's unsustainable. Moody's has turned negative. Fitch has already downgraded us. Where are the realistic people that are saying enough is enough? This is just funny money. This is the implosion of Rome we're witnessing in real time in the United States of America.
I tell you, you're preaching to the choir on that one. I love what you had to say. I can tell you where the real people aren't, and they're not in Congress. That's for sure. I appreciate you coming on. Thank you very much, Rebecca.
Sorry about that,
you always,
Scott.
oh, that's all right. You knock it out of the park as usual. Thank you very much. All right, let's take a look at the equity market.